the same time, South Africa's consumer price inflation is also said to be on a downward trajectory well after the May vote as the economic climate recovers. Economists have reacted positively to the latest CPI drop to 5.2%, marking the second consecutive decline in April. But an interest rate hike is not expected in the near term, as the figure is still sitting on the upper level of the Reserve Bank's target range of between 3 to 6%. Business producer Amanda Masondo reports.
Inflation has held its ground between 5 and 6% since September 2023. The easing of core inflation is not surprising, considering the economy's muted demand and the small effects of higher fuel and energy prices. Prices picked up for restaurants, hotels, and transportation.
The annual rate for restaurants and hotels rose to 7.5% in April, from 5.7% in March. Hotel prices jumped by 1.5% between March and April, taking the annual rate for hotels to 10.4%. Fuel prices increased by a monthly 1.9%, pushing the annual rate to 9%. Inland 95 octane petrol was 25 Rand and 12 cents per litre in April, up from 22 Rand 97 in April last year.
The latest print means that inflation has moved closer to the 4.5% midpoint, but still some way off from the Reserve Bank's target band of between 3 and 6%. FNB's Koketso Mano says interest rates are expected to stay the same for longer in 2024.
Fuel should lift again following the near 40 cents increase in petrol prices. But if you remember, we did also get a fall in diesel prices, so that means the total magnitude should be muted. Over the remainder of the year, we continue to see core inflation stabilizing, while food inflation could portray, a little bit of strengthening at the turn of the year. If you remember that we had relatively hostile weather conditions at the start of this year, so that delayed impact is likely to still show up, even though it might be better than previously expected. Fortunately, we are seeing a less depreciated rand and lower oil prices, and that should support, a lower fuel price or better fuel price dynamics, as well as better imported inflation. Ultimately, though, headline inflation is expected to average above 4.5% this year, so that means that monetary policy should not be in a hurry to move. In fact, we currently only see a potential 25 basis points cut at the SARB's last meeting for this year.
When the Monetary Policy Committee meets, interest rates will likely stay unchanged. For Newzroom Afrika on Channel 405, I am Amanda Masondo.